Hello everybody, my name is Drew Demon and I'm the Devil Stockbroker. This video is going to be a market preparation meeting from our Demons meeting that occurred this Sunday. In this meeting, we covered some of the top tickers of the market, including the SPY, the Qs, NASDAQ, Dow Jones, and some of our favorite tickers, including BBIG. Before we get into the video, I want to invite you to please leave a like for the video if you find this information useful, subscribe to the channel if you want to see more, and please leave a comment if there's anything here that you would like to hear more from me about, or ways that we can improve in order to make sure that we are giving you the best possible information straight from hell's trading floor. Without further ado, let's get into it. Let's go take a look at the market. Some things that I'm going to point out to begin with are we had this chart played out nearly perfectly. I had pointed out zones of huge resistance, like mega resistance above 445. So lines of resistance that were most significant were 445, and we kind of peaked out at 460. Though I don't think we ever really saw that again. And this latest run that we had was 433, 432, thereabouts. And we did have a slight correction on this wave that was like a five and a half rally up to 412. So we're due for something like this again. We are definitely following Elliott waves. That's at least what I think. There does seem to be some consistent Elliott waves in here. The theory with Elliott waves is that there's a starting wave, and the waves will repeat themselves, but within the waves you will find very similar, symmetrically identical, or at least on a scale identical waves within each wave. So the theory goes that you see this down, up, down, up, down, and then there will be another up, and then we're going to start a new wave pattern. So at some point we're due for a rally, and seasonally speaking, November, December is where it's due for us based on where based on the election year that we have. We have a midterm election year with a Democratic president in his second term. Seasonally speaking, all of the signs are pointing to continued downside for the end of October, mid-October to the end of October, and then a holiday rally that lasts from November all the way to December, with a huge recovery in late November, early December. And then that will peter out by January and start to go into decline. That's the seasonality chart dictating what to expect. Now, we are in a very different kind of environment than 2008 and 2000, and I've compared those crashes a lot to this one. The difference is that both of those were very different elections. First, the 2000 crash, we had Bush, who was a Republican. The crash started during an election year, a presidential election year, not a midterm year. And the same can be said of 2008. It was an election year where President Obama was elected in November. And then we saw the markets kind of like really volatile, choppy, and then we didn't see the bottom until March of next year in the first term of his presidency after Obama had taken office. And then we went into quantitative easing and the big bailout package and all of that stuff. So a lot of factors that are different from that now. So seasonality may be out the window, and that's what I'm trying to point out all possibilities right now, because there's several of them. One thing that we have to be careful of is we've been on this downward trajectory for a long time, and I do think that we could see these lows, right? There's several things that I want everybody to watch out for so that they're not rug pulled by an unexpected move to the upside, but that we're also able to keep making profit as long as we're in this downtrend. For right now, things to take note of is we have this rising volume on a huge decline in the stock price. That by itself is extremely bearish. So that gives us some confidence that we are in a continuation pattern. We are trading well below our 200 daily moving average, which is right here. With us trading in this downward trend, and our 50 period moving average is starting to curl back to the downside, we might see another huge wave downward, okay? If we see the 50 cross below the 100 while we're in this downward trend, then I'm expecting prices to move quickly to the downside. Areas of significant resistance to watch out for is right here at 350. Notice this air gap down here. We have a big gap in trading right in this area. So this takes us from 360 all the way down to 340. And then there's this one leg of support right here. There's this big surge of volume where we traded a lot in this price range. So this area is something that everybody has to watch out for a potential bounce. It's all right here. So if the price drops down to 340 and we don't break this level, then expect the market to turn around. This is just what the technicals are saying. Now, however, if we do end up breaking down below that level from 340, I think that we will see 320 very quickly. So right now we're trading in this gap, and we are going to get ready to test 350, which is the first area of support that we have to break through, followed by 340 as the last leg of support, which is going to be the pre-pandemic high. So this is an extremely significant area of support for the entire market. If we break this level, then there will most likely be panic, which is why I don't think we're going to hit this and break it until next year. But I do think that we are going to see the market head further to the downside, and we'll start to test these areas soon, probably in the first week of October, just because I see this huge volume coming in the market as we're heading further down. Some other signs that give me some confidence in that thesis is that the MACD is still in downward momentum. We have yet to put in a low. We're looking for a curve down here, and if we put in a new lower low on the MACD, then we know that the crash isn't over. We have to see a higher low in the MACD before we turn around, and at this rate, the MACD is not turning around unless we just suddenly rip to the upside tomorrow. There's too much turmoil in the market for that to happen. Even if we started consolidating, which is probably the most bullish scenario for the market, is if we started consolidating between here and 363 for the next 2 months, then we're going to put in a lower low on the MACD, and we'll see another leg to the downside according to those technicals. Like the RSI is also putting in lower lows, and we are continuing to cross further and further to the downside. We put in a slightly higher low on the RSI, but that's just because of one daily candle. We haven't seen the green turnaround candle yet, so until we see a green turnaround candle, we won't know where the RSI has bottomed at. So far, it's looking like we're going to put in a lower low on the RSI, and that would also indicate more downside for us in the future. So next week, targets are 350 and 340, like I mentioned, with 340 being the final take profit. At this point, once we start trading at this level, we need to be looking for divergences and any signs that the market is ready to turn around. Anything in the non-defensive sector that starts to perform, anything that's risk on like tech and biotech, anything that's in the semiconductors market and the finance market are more risk on in this environment. So if we see Apple, Amazon, Google, Nvidia, and Tesla starting to get recovery signals, then that means that the market is likely going to turn around very quickly. Pay close attention to the dollar index as well. Right now, the dollar is it weakened a little bit over this past week, but I think that we're probably going to see it bounce here very soon. The move made by the Bank of England is likely to create a more strengthening dollar as their currency inflates, and this is going to make things harder as people flee the British pound in order to put their money into dollar, and this will cause the dollar currency index to make another leg to the upside. We haven't gotten the bearish crossover on the MACD for the dollar index on the daily chart yet, so this could turn around as soon as tomorrow. We don't know, but even in the most bearish case, I think the dollar index will make a return back to the 50 and then bounce again, just like it has here before. We've had one touch, two touch, and we're due for a third. And you can see that this is a growing wave pattern, very consistent with Elliott wave. One move up, correction, move up, correction, move up, and correction. We're due for another one. We had a small correction here, but it was very, very brief. So I think a big correction wave is due for the dollar index, and that might give some bullish pressure to the stock market. So if the dollar index doesn't move further up in the next week, then this may be a signal that the market is ready to turn around. So you see dollar index going down sharply. If you see this move happening very quickly, then the market may pump upward very quickly in opposition. Another one to keep an eye on is HYG. This leads the SPY very closely, and you can see that this, just like the SPY, is forming a nice bear flag. It is a very bearish pattern, but keep in mind that we are now starting to put in higher lows on the daily chart. We're getting some intersection in these candles. I like to affectionately refer to this as a middle finger pattern. We have to see how this goes, but if you see HYG start to make a recovery and we see a double bottom, perhaps if it bottoms here and then breaks out to the upside of this bear flag, then we may be in for a pump in the SPY. This would probably bring SPY back up to around 370, 375 level, maybe even higher. But if you see this break to the downside, then expect the SPY to hit those 340 targets like I had mentioned. If this moves down sharply, then that move could come very quickly. Part of my thesis for this is that there's a lot of fear and chaos in the market that hasn't quite finished playing out. So a lot of people are betting on a big turnaround soon, but the technicals are saying that there's still one big move to make to the downside. We still have to consolidate a little bit more. This candle is very much indicative of expansion, just because we've seen the low put in a new lower low, and we close below this low very clearly. Notice that this consistent lower low pattern is telling us that the market isn't quite done. One more bet for the bulls is that we are forming a descending wedge. So there is a case where this breaks out, then that could give enough confidence to the market to see it turn around. I will be watching this really closely. It's hard to say. This is one of those times where the market it's at a major inflection point. And even though we see signs, and we have been winning on these short bets, we see these signs that it's continuing to go in our favor, we don't want to believe or trick ourselves into believing that this will go on forever, because it never does. It never goes this way forever. Eventually there has to be some kind of recovery. Even the bears themselves get exhausted and need to take profit, and that alone can create bullish momentum. So that's what I just want everybody to be careful of going into next week. If you can't trade this next week closely, if you can't watch the charts closely, then it may be best to stay out of this next week's trading session and wait until you're able to see a clear change in direction, whether it's to the upside or to the downside. There's a lot of risk coming in this next week. There's a lot of mixed signals. If I go even further down, we can see what looks like a head and shoulder pattern. But the problem is that we didn't establish a lower low here on the first shoulder. So this may not actually be a head and shoulder pattern, or it may not play out like one at least. So just a few things to be careful of. I'll cover the Dow next. All right, the Dow is starting to really feel some pain now. So the Dow is starting to form out this megaphone pattern, just like the SPY has. It has yet to put in the lower low as well. The thing is that, I see, the Dow Jones is putting in a lot of bullish divergences here on the 1 hour chart. Let me see what the daily looks like. Not there. Okay, so Dow Jones looks like it is going to succeed in touching the bottom of this megaphone. I would be looking for support somewhere around 27,500 level. Somewhere in this area is probably where the Dow will find some good support. Maybe a little bit above it, but start looking for divergence in this area. This would be a very easy take profit right here. For those who don't normally watch the Dow, and I usually don't use this, but this is a basket of the 30 largest cap companies in the United States economy, mainly focused on value stocks, huge earners. I believe Coca-Cola, the Dow Jones rebalances every year with new companies that have taken over the sector. Let me see. I can pull it up here. Let's pull up the Dow Jones composite. All right, so Apple, Cisco, Intel, and Boeing are the largest electronic technologies. Microsoft, Salesforce, and IBM make up tech services. Johnson & Johnson, P&G, Coca-Cola, and Nike make up consumer non-durables. And then Walmart and Home Depot are the big retail powerhouses. Travelers Insurance, American Express, JP Morgan, and Goldman Sachs make up the finance sector. So these are all the areas where you'll find the big heavy hitters in Dow Jones. So this is not a good barometer for the market, but you can still play it for day trades if you want to. For me, I don't think Dow Jones is a great day trading index. If you're going to bet on any of these, I would just bet against like one of the big heavy hitters like Apple or Boeing, or one of the others that are going through some major pain. But it was worth taking a look at. The NASDAQ, however, and I track the Qs when I trade NASDAQ. This one is going to be a very risk-on environment. So one of the things to watch out for a reversal is if you start to see NASDAQ outperforming SPY. If NASDAQ starts to recover or diverge from SPY, then that would be a signal that the market is getting ready to turn around and switch to a risk-on environment. Yep. So let's go switch to the NASDAQ 100 and take a look at this. So NASDAQ has yet to put in a lower low. It's not done putting in its lower low. It has broken the bottom here. So this is definitely a clear sign that any double bottom pattern that might have been developing here has been broken. We're likely to see this form out a harmonic pattern, actually. What we might see is a kind of like a W pattern, and this actually completes a cipher. So if you see something like this where we have harmonic
ciphers. That's
ciphers,
like a crab or something? Is that a crab pattern?
Crabs or butterflies and ciphers. There's all kinds of different names for the different harmonics based on their shape.
Yeah, I know. Is this a butterfly though?
This would be a butterfly, yeah. Okay. I would actually expect something a little bit more bearish. Probably won't see this high again. We'll probably end up peaking here and then move to the downside again later on in the year. Something like that. That's kind of my anticipation. Don't try to trade a harmonic before it's been made. That's pure speculation right there. Point is, NASDAQ does appear to be heading lower. The 50 is starting to now turn around to chase the 100. So this green line, when it crosses the orange, is going to be a very bearish signal. Algorithms will likely go short on that signal. And you can see that the MACD has rejected off of the slow line. This is the MACD for the NASDAQ. You can see that we had a clear rejection where we were going to cross and then failed to. We just did it again. So this signals another big move to the downside. And you can see that first rejection happened right here. That was our first rejection on the MACD. Well, if the last move was any indicator, then we should anticipate NASDAQ making a 8 to 10% move to the downside in the next week, and then possibly putting in a lower low on the MACD. So let's keep an eye out for this. If we do see a lower low on the MACD, then we know that we've got yet one more move to the downside left. Do you guys have any other tickers that you want to take a look at?
Could you look at Tesla?
Tesla? Yeah, sure. I'll take a look at Tesla.
Thanks.
Definitely a big heavy hitter on both NASDAQ and the SPY. This one's been propping up the market for a while. I've actually been calling for Tesla to make a huge move to the downside.
You're right.
Yeah, I am short on this one. And now we are testing the 100. We had a rejection, so Tesla had bid up during the support, but it closed lower and formed this dragonfly candle. So this is actually very bearish, and it completes a bearish flag, which we saw play out here. This one completed. And I called out literally every single technical pattern that you can think of. We added an ascending wedge, and I said as soon as we hit the top of this, that's it. It's rejecting. It's going to go break down, and it's going to move to the downside and retest support here at 265. It did this exactly. And it made a one-leg move down, and it got all the way down to 270 before it formed up the bear flag and then moved back down to the downside, and it's closed below the support now. So now we have closed below this wick on this move to the downside on September the 6th. This would have been a double bottom if this close had stopped above the wick. But since it closed below, this indicates major downside risk to Tesla. I would definitely be betting against Tesla for the next month. And I'm backing that up with my own money. I think that Tesla is going to have a horrible third quarter earnings, and I think that the market is preparing to price that in. We may see Tesla help turn the market around after the earnings is over and the market has accepted the pricing of Tesla. But I think that the market is going to anticipate Tesla's bad earnings because they know it's coming. And that's part of what we're seeing here in the market on this move to the downside. But, we never know. Tesla always seems to beat earnings. Just no matter what happens, everybody is surprised by Tesla crushing it. So be careful as we get closer to earnings. In fact, maybe when earnings starts getting closer, I'll go bullish. But we'll find out.
Okay, thank you, Judy.
No problem. At the very least, I'm calling for Tesla to retest this next level of support at 250. This is not a take profit level. This is a heavy psychological level of support. You've seen that we have wicked through and tested this level many times, such as when we came back up through we bounced really hard in May and broke through this level, then came back down, retested and failed here, retested and failed here, retested, successfully closed above, and then had a correction. And then on the very next move, it broke through. So I expect this to be a really, really tough area of support here. This will be very difficult to break, but we'll find out. Can we look at Apple? Yes, I can absolutely look at Apple. I'm also bearish on Apple. The one thing that I would say is that Apple has made a strong move to the downside, and the volume is starting to decrease. So Apple is already feeling the pain, and it's responsible for most of the moves in the market to the downside so far this past week. So if Apple starts to show divergences, I would expect this to lead the market's move to the upside. So if you start to see Apple diverging while all the other stocks are moving down, trust that Apple knows what's going to happen, and you're likely to see Apple turn around on the market and predict the next leg up. For right now, I'm bearish on Apple. I'm anticipating that we will, at the very least, test these lows here, probably in a range. I don't feel confident saying that we're going to test a new low just yet because Apple's been really strong. But at the very least, I'm holding on to my Apple puts for the rest of this month just to see what's going on. And until I see strength in the stock, I'll be holding those. So once we get into this range, that's when I will get nervous and looking for an exit. Oxy, yes, we can take a look at Oxy. So Occidental Petroleum, I haven't played this stock at all, but I was bullish on oil going into, I was actually betting on Exxon Mobil for a while. So what I'm seeing here is consistently higher lows, and it's been in this nice consolidation pattern for a while. Pretty large swings, but very consistent swings. Let's take a look at what the oil market is doing right now. Okay, so the market is putting in a low, and it's putting in a higher low. I would say that we could bounce here. I've been waiting for the oil market to bounce, and this looks good. This looks like a good area. I'd expect one more test of this low to put in an equal or a higher low in the oil market, and on that, Oxy will likely pump. So may get a better entry than this, but this could move. The MACD cross to the upside is also looking like it's going to happen. Gotta wait for that confirmation to be certain. If we get a move to the downside and it's stronger and we cross below the 200 period daily moving average, then that could spell disaster for this stock, just because there's this big air gap down here. You see the move that it made to the upside here, there was almost no traded volume here. So there's a chance that this could fall really fast. And this is entirely because Warren Buffett bought. Like, as soon as Buffett bought, everybody bought, and everyone said that this was going to the moon. He's generally right over the long term, but in the near term, remember, he's a value investor, not a day trader. So he's looking to hold this for the next 10 years, which that could be great. This could be a great investment opportunity, at least as far as the oil market is concerned. Though I think that inflation has definitely not peaked. I think that the energy crisis is going to continue, and that's going to put a lot of pressures on companies to buy oil at any price. The United States has placed a bottom on the oil market because they want to replenish the reserves. So that is creating a bottom in the oil market. All of those are circumstances that are likely to push oil stocks higher in the long term. Since we're on Oxy, I'm also going to go look at Exxon Mobil, which is very similar in its chart pattern setup. We had formed this bull flag. I thought that the bull flag was over, but as it turns out, it was not. So I was most definitely wrong about this. I was really expecting Exxon to pump one more time. I thought that it was going to break to the upside on this, so I was very early. But after Exxon takes another touch, another higher low here, wherever I see it put in this low, I'll likely look to go long on Exxon again, because I do think the energy market is going to be one of the first to recovery from this latest move. We'll find out. I'm curious if there's any harmonics showing up in here. Oh, there are. How about that? Okay, so we did have a harmonic. We have two of them, actually. We have a shark and a butterfly pattern. Both of them coincide with each other, and they place targets well above $100. Even a move to $99 would be fantastic for this stock. This is one that I would definitely bet on the rally going into the holidays. This is going to plastic. That's a good point. Yeah, that's an excellent point. Plastics are going to be in high demand. Cheap goods are probably going to sell out. Honestly, cheap goods will be selling very quickly at dollar stores and discount furniture stores and things like that. Just because the cost of everything has gone up, so everybody's going to be looking to cheaper goods, which is mostly made of plastics. So Exxon and Oxy will probably see some pretty fantastic momentum going into next year. This is one that I actually could consider doing leaps on, something like July of 2023 or January 24. There's a lot of reasons to be bullish on the oil sector, especially with inflation out of control and supply chain issues creating high demand for gasoline. Logistics are still very much in need of gasoline. Can't really do anything without it. So, yep. That's I'm glad you brought up Oxy.
I was going to say BBIG.
BBIG, that's a good one to cover. Yeah, right. I want to do a separate video on BBIG. So far we're looking pretty good though. BBIG's put in a higher low, which I was pretty excited about. Let me I wanted to see if I should buy some more or not. I bought a little bit based on your last one. I want to see what you thought if I ready to buy a little bit more. Well, I really liked this entry here on this triple bottom pattern. We had a triple bottom on this. The first bottom was on this candle on the 23rd. We had another bottom on the 1st of September, and we had a third on the 23rd of September. Notice the wicks got deeper each time, but it always closed above this level. That's very bullish. Good, strong area of support. So I think that going into the next month, now that the court case is settled, there's nothing holding the stock down anymore. The idea of the merger is going to be more broadly accepted. BBIG is looking really good. For the long term, as a social media company and an advertiser, looking very attractive. I do think that they've got some headwinds as far as growth is concerned, because there's still widespread acceptance of incumbent social media platforms like Facebook, Instagram, YouTube as short form content platforms. Each of those are going to be pretty stiff competition for BBIG with their Lomotive platform, but I still think that it's actually a really good competitor to them, and it's a US based company.
Yeah.
The one thing that I will also point out is that while the stock has been consolidating like this at the bottom of its chart, the volume has just been drying up so much. The only times where the volume has gotten really big was when we had these huge up moves as a result of short covering rallies. So this is probably the time to accumulate stock in BBIG for the long term. I don't know how long it's going to take to go through the merger, and even after the merger, I don't know how long it will take for Vinco Ventures and Zash Global Media to become massively popular.
Right, yeah.
But it will come naturally over time. People are hungry for new platforms, and it's evident because YouTube has been frustrating its content creators and its viewers. A lot of people are moving to Rumble and Twitch TV. So each of those platforms are getting really popular, and those don't trade publicly. Vinco Ventures is one of those companies that if they start to get a foothold in the industry, they have the capital at their disposal to make some really fantastic acquisitions and build a portfolio of really powerful and popular social media companies.
Yeah. Any chance of the squeeze? I know you put out a video like a couple of weeks ago that you were looking, you thought they had real potential there. Is that still, you think that's still on the table from what you could see? I haven't looked at
I do, but I think that it's going to really rest on the shoulders of retail to purchase stock and not options. Buying stock for the long term and exhausting the supply of stock is what's going to cause the squeeze. The biggest advantage that retail has right now is that liquidity in BBIG is so small and so dry that if just one person with a very powerful following, like any celebrity, starts pointing out that Lomotive is like the thing that they're going to switch to and get away from Instagram or any of the other platforms, anything like that could be a catalyst for this thing to take off. So even like a minor testimonial from a huge celebrity like Snoop Dogg, for example, like that was huge for BBIG stock. That brought a lot of attention to Lomotive. The platform still has some problems though, and they've got some growing pains, and until they get profitable, I don't think a squeeze is really going to be triggered. They have to have some kind of catalyst. But in the meantime, this is the time to load up and build a portfolio of stock in BBIG.
Cheap shares, yeah.
Yeah. I would say focus on building a portfolio of shares, and you could do things like selling put options on BBIG. Do cash secured puts, and if those get assigned, then sure, you have to pay a little bit. You pay for the stock, but if you're liking the stock at these levels and you're buying it anyway, then great. And if you don't get assigned and they expire out of the money, then you keep that premium. That's also good. So you can do something like that, selling cash secured puts against BBIG, going into the next several weeks, and maybe we'll see that accumulation occurring over the long term. But I'll do a bigger video on BBIG separately, and I'll talk to the community next week. So that's going to have to be it. I'm over my time. Thank you guys so much for hanging out. I really enjoyed talking with you like I do every week. I'll look forward to seeing you guys next Sunday for the next one. But first, we have opening day tomorrow. So I look forward to seeing you guys at the Bell. Have a hell of a time in the market.